Alright guys, it's time to do an update video on my portfolio and let you know all the different stocks that I own in 2020 and how much of my portfolio each stock makes up as a percentage, and share with you like my quick opinions and thoughts on each stock in kind of a really fast, like rapid fire style. Now, if you've been a longtime subscriber of my channel, then you know that there are certain things that I don't really feel comfortable sharing with the entire world. And that is like how much money I have in stocks. I really consider that to be personal information. And I ask that you please be understanding of that, because I do have like some friends and family that sometimes watch my videos as well. And I don't necessarily want them to know, like how much money I have in stocks or how much money I have invested and things like that. I know that there are other YouTubers who do share that information, but I'm not a very big YouTuber. I don't have any kind of paid membership groups or anything like that. I'm just a regular guy just kind of sharing his opinion for free on YouTube. So please be understanding of that. But what I will share with you is, again, all the different stocks I own, how much of my portfolio each stock makes up as a percentage. And I will also let you know how I'm doing on each position. And I'll show you a screenshot that shows the percentage that I'm either up or down on each stock, so that there is at least some kind of validity there and I'm not just like throwing out random things. Now, with all that said, I do currently have 3 different accounts, those being Robinhood, E-Trade, and M1 Finance. But you probably know from previous videos that I do almost all of my investing exclusively on Robinhood. I almost never use the other 2 platforms anymore. So when I show you screenshots, it will be from my Robinhood account, because that is where the vast majority of my money is, and it'll just kind of keep everything simple if we just kind of stick with that. But in terms of my overall portfolio, I am taking everything into account. Having said that, I will not be including my cash portion, which is about 35% of my portfolio. I know it's pretty high, but the stock market is pretty high right now, and I tend to slow down my buying when the stock market is trading at record highs. So just keep in mind that that is not being factored into my portfolio, because I want to just kind of keep everything clean and simple and have like a whole 100% portfolio and kind of break that down. So we're not counting cash, we're just counting stocks. Okay, having said all of that, one last thing I gotta mention. Last year when I did this video, I had about 13 stocks that I was holding. I now have 11 stocks. So my total stock count, I guess you could say, position count, has decreased from 13 down to 11. I sold out of about 5 stocks, I believe, completely entirely, and then I opened 3 brand new positions in 3 other stocks. So that kind of cancels out a little bit, and then it basically dropped from 13 down to 11. Now, you'll probably be curious about what stocks I sold. I did make videos on this in the past, so I won't regurgitate all the same information, but you probably already know this, that those stocks are Taiwan Semiconductor, AMD, Nintendo, NEO, and 2U. Now, the first 3 there, Taiwan Semiconductor, AMD, and Nintendo, those are 3 stocks that I did very well in, as you probably know from previous videos. For example, AMD, I was usually buying very heavily at under $10. I mostly sold that stock in the 20s and 30s. So in some cases, I made like 100 or 200% on that position. And those stocks tend to be pretty volatile, so I just really didn't want to risk losing those profits. So that was mostly the reason why I sold those. But it's not that I don't believe in those companies. I do actually think that they are great companies, but I just really wanted to lock in my profits. So that's why I sold those. And AMD and Nintendo, by the way, used to be like my first and second largest stocks. So they were very large positions a long time ago. If you're like an old school viewer, then you know that. But over time, I kind of gradually sold out of those. And then this past year, I just fully kind of exited those positions. And then the last 2 are NEO and 2U. NEO I basically broke even with, and then 2U I did sell for a loss, but those were very small positions. I just felt that those 2 stocks were a bit too speculative and a bit too volatile. And with the stock market trading, at record highs right now, I just felt that it was a good time to just kind of get out of those and not have so much volatility going on. So that was why I exited those 2 positions. But again, you probably already know this because I've covered most of that in previous videos. Okay, now moving forward, I did pick up 3 brand new stocks, and then I still have the other remaining stocks. So we're just gonna go ahead and jump right into this. I hope you guys enjoy this video, and if you do, make sure you hit the like button, really helps the channel. And if this video is well received, I will absolutely make future update videos on my portfolio. But let's just go ahead and jump right into this, and we'll start from my largest positions down to my smallest. Alright guys, now I did do some very light trimming on some of my biggest positions just to kind of balance out my portfolio a little more. But starting with my absolute biggest position, that is still currently Microsoft at around 21% of my portfolio. And I know that is, a very heavy stake there. But this is really a core foundational stock for me that I will probably invest in all the way through retirement, just because they are such a well-run company with tons of dominance across various areas like computer and professional software with Windows and Office, cloud computing with Azure, which also includes artificial intelligence and autonomous driving. There's gaming with Xbox and game streaming with xCloud, coding and programming with GitHub, and even professional networking with LinkedIn, all of which continue to see unprecedented growth for their already massive sizes. In fact, their sales continue to grow at extremely healthy double-digit rates every year, despite already doing over $125 billion in revenue last year alone. When looking at the stock, they are up over 300% in the past 5 years and continue to break new record highs all the time in what is one of the smoothest looking uptrend charts that I think you'll ever see out there. And I'm currently up over 60% on my personal position as well, which is actually a lot more than you might think, considering that it's by far the largest stock in my portfolio. So those percentage points are really worth a lot more because, I've built it into a larger position, and that's why my kind of cost basis gets affected a little more. But it is a big position, so those percentage points really matter a lot more. Anyway, on top of all of that, Microsoft is also a pretty attractive dividend growth stock, as their dividend is growing at a double-digit rate and has grown every single year since they started paying it about 16 years ago. Currently, the yield is very small at just a little over 1%, but my dividend yield is actually almost 2% because I bought at lower prices. Again, the stock is at record highs right now and is also already my largest position, so I won't be adding anytime soon, but I definitely do plan to hold this one long term, and I may even add on any major dips or market corrections because I just do really believe in the company. Okay, moving on to my second largest stock, that is still going to be Amazon, ticker symbol AMZN, at about 15% of my portfolio. And this stock has been on a tear over the past 5 years, jumping by over 445% during that time, although it's been more flat than usual in the past year or so. Now, I'm only up a little more than 100% at this time, which is, obviously lower than what the stock has been doing in general, but I'm still very proud of my position. It's been performing very well, and I'm very happy with it. Now, I will just quickly add that I was actually buying some shares recently, some fractional shares actually in my M1 Finance account, but I did actually sell out of those at above 2,000. I wanted to kind of trim my position anyway, and I don't really like using M1 Finance anymore, so it just kind of worked out for me, but it's still, a big position in my portfolio, even though it's exclusively just in my Robinhood account. In any case, just like Microsoft, I will likely hold this core position well into the future, given that they are the #1 market leader in both e-commerce and cloud computing, which are two gigantic markets that I only expect to get larger in the future, and the result has been unbelievable revenue growth over the years for a company that is expected to do over $300 billion in sales this year alone. Not looking to add any more at these near record levels above $2,000 a share, but I will continue to hold my position for the time being. And if there's any kind of crash or anything like that in the market, I would actually definitely be willing to add on any kind of market correction or anything like that, because Amazon is another company I really believe in. Okay, guys, that brings us to stock number 3, and that is just barely going to be Disney, ticker symbol DIS, which we'll see in just a second that there's actually another stock that has almost beaten Disney out of the top 3, which is pretty crazy. But at the time of this recording, Disney is just barely hanging in there at about 13% of my portfolio. Now, Disney has been pretty flat in recent history, as they are only up by less than 40% over the past 5 years, but I am actually up by a little bit more than that myself, just mostly thanks to some opportunistic buying and the recent surge in stock price thanks to the launch of the new Disney Plus streaming service. However, these recent investments have led to a rising valuation as the stock price went up and profitability has actually gone down, and the whole Fox acquisition has also hurt their balance sheet, leaving them with a lot more debt than usual. But it's also led to new growth that they don't typically see. And over the long term, I think they're making the right moves now so that they can remain dominant in the future in some giant markets like video streaming and of course blockbuster movies, with many incredibly strong brands that they obviously own. Now, they do also pay a small dividend, with my current yield on that being around 1.7% because of my lower cost basis. But this is really another long term foundational stock for me because of their gigantic business with some very strong household brands. Again, maybe, probably not adding at these levels, but definitely a stock that I look to hold over the very long term. Okay, now stock number 4 might be a little bit of a shocker because it grew hugely in my portfolio, climbing from one of my smallest stocks to almost being one of my top 3 largest. But currently, it is still just slightly behind Disney as my 4th largest stock, and that is Tesla, ticker symbol TSLA, coming in at also 13% of my portfolio. But again, just barely behind Disney. It's really incredible how much it's climbed. Now, the reason why it's climbed, the ranks in my portfolio by so much is because I was buying the stock very heavily at under $200 a share, but I was also buying it in the mid and kind of high 200s as well. So I was buying at some different ranges and by some very large amounts. And because the stock has soared by so much lately, and despite me only owning the stock for less than a year, I'm actually up well over 200% on my position, which is really incredible. And that's because the stock has absolutely skyrocketed recently, climbing from around $176 a share to now trading for over $700. That is really insane to think about. Now, I'm not planning to buy any more at these current levels because the valuation is just too high for me, but I'm really excited about their future with upcoming vehicle releases like the Model Y, the Cybertruck, and the Semi, all of which I expect to help them maintain dominance in the electric vehicle and autonomous driving market. So for me, this is really just a long-term hold and one that I may actually buy more of if the stock ever drops hard again, like it kind of has in the past. If we see any kind of dips like that, I would actually be considering adding more to my position because it's a long-term stock that I really believe in. Okay, coming in here at stock number 5, that's going to be AT&T, ticker symbol T, at about 11% of my portfolio. And this is actually a stock that I haven't owned for a very long time either, for sure less than 2 years. But when it crashed to below $30 a share, that's when I really jumped in very heavy and built up a very large position before it was able to kind of climb higher and recover above that $30 mark. So my cost basis is still just barely below that, and I'm currently up close to 30% on my position. But what I really love about AT&T is their huge dividend, and it's the reason why I initially bought into them, that still yields over 5% with a massive 35 years in a row of increasing that dividend every single year, even through recessions. And because I bought this stock at such low prices, my current yield is actually about 7%, which I really love collecting every quarter because it's a great source of recurring cash flow for me. Now, there's not really much that I can say positively about their business right now, as the whole kind of cord-cutting cable TV movement, along with the downfall of wireline usage for telephones, has left AT&T with a crashing legacy business that is leaving them with practically no growth over the next 2 years and a really horrible balance sheet that carries a ton of debt. But part of that debt, though, came from the acquisition of Time Warner, which they plan to use to fuel a new streaming service called HBO Max. And with 5G finally starting to ramp up a little, there's a few different reasons to think that AT&T trading at just a forward P ratio of only around 10 is not really that bad of a deal. To be honest, though, I mostly hold it for that dividend, and as long as they keep growing it every year, I probably will not be selling the stock. Okay, and coming in at stock number 6, that's going to be JP Morgan Chase, ticker symbol is JPM, at about 7% of my portfolio. And this is literally the only bank stock that I have ever owned. And I mostly own them for kind of diversification purposes, but because they are one of the largest and most well-run banks in the world, which led to revenue growth of almost 10% in each of the past 2 years, which by the way is pretty hard to do for such a large bank, not to mention that most other banks have been really struggling lately. And despite despite them being expected to be flat this year, I actually think that's a good thing because expectations are lower and Chase is known for consistently beating analyst estimates. So I kind of welcome the lowered bar. But in any case, the strong performance has led to a surging stock price that is up by over 140% over the past 5 years to new record highs, although I'm personally only up by about 60% on my position at the time of this recording. Still, I continue to hold JPM because it offers my portfolio some much needed diversification, as well as a growing dividend that has grown for nearly a decade straight, has a low payout ratio, and a 16% growth rate, despite still yielding over 2.6%. And by the way, on my personal cost basis, I actually collect a dividend yield of over 4%, which I am very happy about. Probably not adding to my position at this time, but I may consider it in the future on any kind of large dips or anything like that. Anything like that. Okay, here, moving on to stock number 7. That's going to be Alibaba. Ticker symbol is BABA at also about 7% of my portfolio. And this is actually my favorite Chinese stock because they're by far the market leader in the Chinese e-commerce market, and they're also the leader in cloud computing in the Asia Pacific region. And that dominance has led to tremendous growth over the years, which you can see on this chart here. Now, the stock has been very rocky because of the Chinese economy struggling so much, which got even worse with the whole trade war. And of course, now there's the whole coronavirus only making things worse. So I wouldn't be surprised if the stock struggles here, at least in the short term, but I'm currently up over 30% on my position, and I really don't plan on selling anytime soon. In fact, I might actually buy some if they start to drop again because of all of the issues that China is dealing with right now. Okay, and that brings us to stock number 8, and that's going to be a brand new stock in my portfolio this year, and it's actually the only pharmaceutical company that I happen to own, and that is of course AbbVie. Ticker symbol is ABBV at about 6% of my portfolio. And the reason I like this one is because it does give me some diversification. But to be honest, the biggest reason that I bought the stock is because it actually crashed very heavily, and I just really felt that it was overdone and the dividend was too attractive for me to ignore. So I jumped in and I started buying it as it continued to crash. Now, they are technically still up by about 50% over the past 5 years, but there was a moment this past year where the stock had essentially crashed by around half their value. And as far as my position goes, I'm currently up by almost 30% on that position, but probably more importantly is my dividend yield on this stock, which is about 7%, and I really love that. Now, any new buyers of the stock would have to collect a yield that is a bit lower at around 5.4%, but hey, that's still very attractive considering the reasonable payout ratio, the very high growth rate of over 20. And I know that it only says 6 years of growth there, but that was actually when they were spun off from Abbott Laboratories. And if you kind of combine the two, the dividend growth history would actually be pretty close to 50 years, which is very large and obviously very impressive. In any case, AbbVie definitely has their issues, and that's primarily the loss of patent protection for their number one selling drug called Humira in Europe, which has already begun, and the impending expiration is also expected to happen in the United States in 2023 as well. So those are big deals. Now, they have made some moves to try to adapt, notably a $63 billion acquisition of Botox maker Allergan to help them kind of further diversify their portfolio, not be so heavily reliant on any single drug. But even that has come at a high price, as AbbVie's balance sheet is definitely not the prettiest out there, with a ton of long-term debt. And that, coupled with the fact that I've never been very good at understanding pharmaceutical stocks in general myself, is part of the reason why I probably won't be adding any more shares at this time, although I probably will continue to hold my position, at least for now, because I do really like the dividend that I continue to collect. All right, that brings us to stock number 9, which is another brand new stock for me this year. And it's also the only other Chinese stock that I'm willing to invest in at this time. And that is, of course, Tencent. Ticker symbol is TCEHY at just about 3% of my portfolio. Now, with the Chinese economy struggling so much right now, The only reason why I'm kind of willing to buy into this weakness with Tencent is because I just feel that they are such a large and dominant player in Chinese internet technologies and are also much more of a global company than I think people realize. For example, they own the largest messaging app in China with over a billion monthly users and gets used for things like networking, ride hailing, digital payments, entertainment, and even online shopping. On top of that, Tencent is also the world's largest gaming company by game revenues, which is even higher than gaming giants like PlayStation's Sony, Xbox's Microsoft, and also Nintendo Switch's Nintendo. In any case, this is by all accounts a growth stock, which fits perfectly with my long-term investing strategy as sales continue to soar by very large amounts every year, and that's despite the Chinese economy struggling so badly. Now, I do think that there's a very real possibility that the whole kind of coronavirus situation can drag down the stock a little bit more, at least kind of in the short term, but I'll probably use any of those large dips to add to my small but kind of growing position, despite the fact that they are already up by close to 200% over the past 5 years, but my personal position is only up by a little over 20% so far. Okay, and coming in here at stock number 10, this is not an entirely new position, but it is still a pretty new one of less than 2 years for sure, and that's Nvidia, ticker symbol NVDA, at about 3% of my portfolio, and it's just kind of barely behind Tencent there. And for me, this is a really long-term play on the future of some very trendy kind of buzzwordy markets like artificial intelligence, cloud computing, gaming, autonomous driving, the Internet of Things, and even smart cities, all of which NVIDIA competes in with their very high performance GPU chips that process a lot of data that is generally used in some of those markets. Now, the company itself has gone through some difficult times lately, with sales plummeting in 2019 because of the whole kind of cryptocurrency crash, coupled with some new GPU products that were heavily criticized by gamers. But 2020 is looking to be a return to growth, as those future markets that I mentioned earlier should help NVIDIA continue to grow over the long term as long as they can execute. In any case, the stock is still up by over 1,000% over the past 5 years, which is pretty crazy, but the recent struggles had led to a stock crash, which is where I kind of swooped in to pick up some shares. Now, I actually only hold this stock in my M1 Finance account. It's the only stock that I do that with because I only purchased this one using fractional shares. So I have to show you a screenshot from that account for this one, but I'm currently up close to 35% on that position. And I was actually up more, but I did do some recent buying, and unfortunately that kind of raised my average cost basis because my position was so small to begin with, but that's just kind of something you have to deal with as a long-term investor sometimes. Either way though, I'm not planning on buying any more shares at this time because the valuation is pretty high, but if it goes through any kind of major dips in the future, I may actually add to my position. By the way, they do pay a dividend that has a ton of growth potential with only an 11% payout ratio, but the yield is so low right now that I don't think anyone really takes it into account yet. Okay, and finally we have the newest addition to my portfolio that I literally just started buying like only weeks ago, and that is Carnival Cruise Line. Ticker symbol is CCL, at less than 1% of my portfolio, and it's really only about a 1/4% right now. But again, that's because I literally just started buying it, and I'm really planning to make it a larger position over time as it hopefully continues to drop. Now, of course, this is the cruise line market leader, but because of global macro weakness, along with a few other issues, the stock has been beaten down to a pulp over the last couple years, crashing by close to half their value and leaving them barely up by about 1% over the past 5 years. And by the way, I am currently down myself about 4% on my position as well. But the bright side to all of this is that the valuation is dirt cheap right now at over 50% lower PE ratio than the sector, while the dividend has climbed to over a 4.5% yield, despite still climbing by almost a 15% growth rate. And yet their sales are actually still climbing every year despite all the macro issues. Now, I do expect the whole coronavirus to be a drag on this stock, in at least here in the short term, but my plan is to keep buying heavier as it drops and hopefully build up a bigger position over time so that I can collect that really nice dividend as the yield continues to go up. Okay, so there you have it, guys. What do you think about my portfolio? I would love to hear your thoughts and comments down below, and I'll try to respond to as many as I can. And as always, guys, please do your own extensive research and make your own decisions. One of the reasons why I tend to be a little vague in terms of like the personal information that I give out is because I really don't like the fact that so many people out there don't want to do their own research, they don't want to make their own decisions, and they just want to copy other people's portfolios. So I try to make it harder for them to just kind of copy every move I make. That's why I don't really like sharing every detailed move that I make, and I give just kind of broader, kind of based information. So anyway, please again, do your own research, make your own decisions. We're all different investors or traders. We have different opinions. We should not be just blindly copying each other's portfolios. But if you do happen to own any of the stocks that I own, or if you're thinking about investing in any of them, please let me know in the comment section. I would love to read those comments and talk some stocks with you. I think it would be a lot of fun. But thanks again for watching. It means the world to me. Thank you for all the support, and I'll catch you guys in the next one. Take care. Bye-bye.